with sovereign countries buying real physical silver. And we've been hearing, of course, that Turkey's buying a lot of silver, India's buying a lot of silver, China, even though the Chinese silver, some of it has gone back to the LBMA because they have a shortage there. Recently, or yesterday, Eric Young posted this tweet here, or on X, and he said, Bloomberg says what Oriental Ghost and me have been saying for the last couple of weeks: Chinese silver stockpiles has been drained to the lowest levels ever. Whatever silver that was shipped from the Shanghai Gold Exchange to LBMA, London, was leased silver. That probably has to be returned to China in December. Why is it different this time? Well, it's different this time because we've got what Zoltan Pozar said a few years ago, the commodity war. Basically, the petrodollar's finished. John Connolly's comment about the dollar being the U.S.'s currency, but your problem, talking to other finance ministers from around the world, that's finished now, because the dollar is waning as a major reserve currency, and gold, of course, is becoming the major reserve asset. And with the world getting divided into blocks, with globalization waning as well, commodities are going to be the most important asset, in my opinion, going forward. And countries are going to do the most they can to protect them. And that's why China and the U.S. have declared recently that silver is now a critical mineral or precious metal. And I think other countries are realizing this, and they're trying to jump ahead of the U.S. and China and buying their own physical silver. And that's why I've been hearing from very good sources, I can't go into too much detail, that there's a lot of central bank buying, especially in the Middle East, not just of physical gold, but silver as well, that they're also buying futures contract on COMEX for delivery. And is it any wonder that the LBMA...
A remarkable trend has taken shape. Major governments are classifying silver as a critical mineral. The U.S. and China have already done so, signaling a new race for physical supply. Central banks, especially in the Middle East, are quietly but aggressively buying not only gold but also silver, both physical and futures contracts for delivery. LBMA inventories have slipped near record lows, while periods of backwardation suggest strong desire for immediate physical metal rather than paper substitutes. What was once a retail-driven movement has evolved into a sovereign accumulation cycle. Physical silver has once again become a prize worth fighting for.
Stocks of silver are near record lows, and we're still seeing some backwardation in silver, which is a sign that people want the physical. So that's the main difference. Back in 2021, there was no interest from major institutions, from very wealthy individuals like David Bateman, billionaire tech entrepreneur who's bought loads of silver and gold. Yes, it was still just a paper game, and here we were, the small retail silver bugs or silver apes were trying to go against Goliath, I guess, and we kind of failed, but now it's a different game. We have sovereign countries buying real physical silver, and that's the Achilles heel for the bullion banks, which I suspect they short the precious metals, and especially silver. I would say a lot of it is for the central banks, so they will be covered in terms of losses. The central banks will make them whole. And why do I say that? Well, because silver is like a major canary in the coal mine for the fiat regime system. And I was speaking, I've been speaking about this to the Gnome of Zurich, and he's done a lot of study long term, and he looked at open interest on COMEX in the 70s, and it was huge for silver. And right around the time that the Hunt brothers were stopped from cornering the market, open interest in silver collapsed. And the Gnome of Zurich thinks a lot of the open interest in silver is indirectly for the central banks, for the Fed, for the Bank of England. But now...
In 2021, retail investors tried to challenge the financial establishment through coordinated silver buying. But institutions dominated the paper markets and the movement faded. Today, the dynamic has changed entirely. Sovereign demand is overwhelming the traditional structures that historically controlled price through short positions and derivatives. Nations such as Turkey, India, and China are draining physical markets, while reports indicate that Middle Eastern central banks may even be accumulating on behalf of strategic partners. Chinese silver inventories have fallen to their lowest levels on record. The world wants physical metal, not promises, not futures, but the real thing.
With sovereign countries buying real physical silver, and we've been hearing, of course, that Turkey's buying a lot of silver, India's buying a lot of silver, China, even though the Chinese silver, some of it has gone back to the LBMA because they have a shortage there. Recently, or yesterday, Eric Young posted this tweet here, or on X, and he said, Bloomberg says what Oriental Ghost and me have been saying for the last couple of weeks: Chinese silver stockpiles has been drained to the lowest levels ever. Whatever silver that was shipped from the Shanghai Gold Exchange to LBMA, London, was leased silver that probably has to be returned to China in December. So that's what it's all about. The silver, people want physical silver. And yes, I've been hearing from good sources, as I've been saying recently, that Middle Eastern central banks, like Gulf Cooperation central banks, are buying physical gold and silver. Speculation from my sources that they could even be doing it for the Chinese. This morning, for example, and I'm in London for those of you who don't know, and it's just before 8 a.m. Yes, and the futures are open despite Thanksgiving. The schedule might be a little shortened. I'm not too sure what time it will close.
Silver has long been a barometer of stress in the global monetary system. When silver prices have surged in the past, like in 1980 and 2011, each move reflected major financial turmoil. Today's setup suggests something more dramatic, not just another crisis, but a deeper shift in global monetary order. Analysts note that silver's open interest behavior echoes patterns seen during major structural breaks in the 1970s. With supply tightening and physical demand surging, the market's fragility is becoming visible. This is no longer speculation, it is the early signal of a monetary realignment, with silver moving first.
But I noticed this morning, I get up very early, that silver was down like quite a bit, like 50 cents. I think the low overnight, let's see here, was around 52.70. And then right around 5 a.m. London, which is 8 a.m. Saudi Arabia time, and 9 a.m. Dubai or United Arab Emirates time, or Qatar time, silver started picking up. Am I saying they're buying silver? It could be. I haven't heard from my source, but I bet he might call later on today and tell me that they've been buying this morning. And that's what it's all about. And why do I think that we're going to have the mother of all short squeezes? And I wouldn't be surprised if we see silver at $100 even before the end of the year, or maybe by January. I think it's going to get really explosive, and one of the reasons for that is because of that 45-year teacup and handle formation, the mother of all teacups. We've spoken about that. And of course, I've been buying silver since 2003. I started like a year after started buying gold. And silver was around $4 or $5. And it's been a rewarding experience, but at times frustrating because...
Technically, silver has completed what some analysts call the largest cup and handle formation in modern market history, spanning more than 4 decades. Breaking above the long-standing resistance around $50 signals the potential for an explosive move. In previous cycles, silver advanced several dollars per day while trading at far lower price levels. With today's tighter supply, broader geopolitical tensions, and sovereign demand, single-day moves of $10, $15 are no longer unimaginable. As the market transitions from paper control to physical scarcity, traders and investors are bracing for what may become one of the most dramatic short squeezes in commodity history.
We silver bugs and also gold bugs, we know how manipulated this market is, how important this market is. Every time silver spikes, let's say to near 50, like it did in 1980 and 2011, it means there's like some kind of crisis. And there were crises in 1980. The dollar, the fiat dollar, was almost on its way out. Jimmy Carter was issuing foreign currency treasuries because people didn't want the dollar. And in 2011, the Euro project was on its knees, and Portugal, Italy, Ireland, Greece, and Spain, they almost went bust. So something dramatic, something much bigger than just a financial crisis is happening here. And what do I mean by that? Well, I think it's monetary chaos. That's what it is, and silver's pointing to that. If you haven't gotten your silver yet, your physical silver, I think you'll be kicking yourself because right now you can still buy it for around $50, just a little more than 50. But pretty soon, $50 is going to be history. And the same thing goes for gold, in my opinion. So why is this teacup formation so important? Well, because they're very bullish formations, and this one is the longest I've ever seen, and probably anyone who follows technical analysis ever seen. And the handle took, from 2011 to April 2024 for us to break through the handle. So 13 years. And we're now on the monthly chart here, as you can see. If we stay above 51 by the end of trading tomorrow, Friday, November 28th,
precious metal equities traditionally outperform the underlying metals during bull markets, but this hasn't happened yet, an unusual divergence. Analysts argue that this signals the early stage of a larger acceleration in gold and silver prices. As retail investors return, the gold-to-silver ratio becomes the key indicator. The faster it falls, the faster silver is outrunning gold, and the stronger mining stocks tend to perform. With global wealth beginning to shift from financial assets to hard assets, the sector is positioned at a rare intersection of low valuations and rising demand. For many, this may be a once-in-a-generation opportunity.
It means that we've blown off the roof of the teacup, the top of the teacup, and that's very significant, and that's why I think it's explosive. It's the mother of all teacups being broken, and I've seen analysts talk about silver going up $5-10 a day. I think that's what we're going to start seeing. We saw that back in 05, 06, 07. I remember well. We did see $5 silver days, but back then we're trading in the teens, and we were seeing that. And now we're trading in the 50s. So $5-10 days, or even $15 days, would not surprise me. And that's why I think you need to hold on to your physical silver for dear life. It's not for trading. You might want to trade more medium to longer term your mining stocks and silver miners in particular. And I wanted to touch upon that as well, because Peter Spina, from the founder of GoldSeek and SilverSeek, and I used to listen to GoldSeek radio prior to there being YouTube, really. I used to listen to that every weekend with my wife. I love SilverSeek and GoldSeek. And I saw Peter Spina in Zurich, and he actually interviewed me for GoldSeek Radio. If you're an ex, go onto Peter Spina's handle. It's at GoldSeek, and he published our interview in Zurich. It was a 10-minute interview. I really enjoyed it. And he's a great guy. He posted this 3 hours ago, and I'll read for you. The only good reason to own gold and silver stocks is to outperform the gold and silver price. The risks you take on must be rewarded with higher returns, especially in a bull market. So far, the outperformance of the equities is not yet rewarding the risks. And Peter's a relatively young guy compared to me, but he's been in this space, precious metals, since he was a teenager. He's done really well, so he knows what he's talking about. An acceleration phase is needed for rewarding these risks. And he says, I believe this to be the start of the next and more exciting phase of the bull run. The stealth move in precious metals has been ignored for a huge portion of its run. This is no longer the case. The bull has been unleashed for all to see. Many are going to join the ride in a relatively small gold-silver market. Silver above $50 an ounce plus, with retail flipping into net buyers, is a big sign. More specifically, the gold to silver ratio will be the true indicator of the big run in gold and silver stocks. The lower the ratio goes, the faster the silver price rises, the more of an indication that the next buying wave of retail to other wealth categories enter the precious metals markets. This looks to be one of the easiest risk to reward investment opportunities in this market, maybe ever.